All right, good afternoon, everybody. This is Event Trader here, going to be joined shortly by Craig Rapizarda, of course, Trend Tracker on our team here, and I believe Scott's going to jump in at some point too. So basically what we're trying to do is we're trying to provide a little bit more segment-type commentary in the afternoon, particularly when things are going a little bit slower. And one of the things that we want to keep an eye out on is, of course, the IPO market. We saw a pretty hot IPO market this week. Naturally, Lyft was grabbing a lot of attention in that early trading, and then we had three price yesterday, including TW, which is Tradeweb Markets, Silk, is it NGM Biopharmaceuticals? That's NG, ticker symbol NGM, and then Silk Road Medical, ticker symbol SILK. Were three names that caught our attention this week. Also earlier in the week was that Rune Holding, ticker symbol RUHN. So we're just kind of watching this action play out, and the plan is to kind of talk about some of the new IPOs that are hitting the market, look at them a little bit more from a fundamental perspective. And then we're going to have Scott talking a lot about how he trades these from a technical perspective. Obviously, he waits for these to get a little bit deeper into the trading period so he could establish support levels and resistance areas and everything. So, and that's where we're going to get into Smart Sheet. This was one that Dennis Hobein, who does all the write-ups for our IPOs, will be, it was one that he pointed out. It was a name that got beat up recently following earnings, and he had a pretty good argument on why he was still pretty positive on the name despite it giving up some of those gains. So basically, if you're looking for the IPO commentary, it's located under the next big thing. If you go under the Investing and Trading tab on our website, you'll see fundamentals, and it's got emerging growth stocks, special reports, stock ideas, strategy, meeting key points, and then there's the next big thing, and that's where Dennis posts this. When you pop down to the page, we'll go through the setup here in a second, and then I'll also point out the archives. But generally, he usually does a opening commentary here. He's talking about the Levi and Lyft IPOs and just in general how the IPO market is doing, and then he breaks down each of the IPOs. First one up, of course, is Tradeweb Markets, ticker symbol TW, where he lays out the expected IPO date, what industry they are in, and then he provides some basic information on the lead underwriters, shares offered or outstanding, and the expected price range, and expected deal size. Revenue growth when applicable, operating loss, and adjusted EBITDA are the three major metrics that he will focus on for the overall glance at an IPO. And then you can see just below that is the NGM and then the Silk with Rune following there at the bottom. And in that, he'll do a nice job at laying out some of the fundamentals behind these names so you get a fair understanding of exactly what's being IPO'd there and what exactly you're trading. So that's the basics there for the next big thing, and I highly recommend keeping an eye on this. I think you could set an alert for yourself under IPOXX, and that should alert you to any time an article is posted or if there's an update to some of the new IPOs that are expected in the following week. So definitely want to keep an eye out on this. You don't necessarily have to trade every IPO, but it's good to see what's coming out to markets, picking the names that you might like from a fundamental standpoint, and then just kind of watching them play out and see if things start turning into a favorable buying opportunity, or if you're against the name and you just feel like you need to be in short, then that gives you another aspect to it. So, but the one thing is for sure, these are new names that are coming to the market that not everybody is trading them, not a lot of eyeballs on. Obviously, a lot of institutional money has either already been involved with the IPO process, or they just simply don't have this on their radar. So it can be a little bit more volatile trading, particularly at the get-go, but definitely names you want to have on your radar. So with that, we're going to go through some of the recent ones, and I think we definitely need to kick off with Lyft. Lyft, I believe Scott's got a long on Lyft right here at the moment.
That is correct.
And Scott, anytime you want to jump in here, or Craig, if you got anything to add, by all means, just jump right in.
Sure.
But this priced at $72, which was at the high end of the revised 70 to 72 range. It's 32.5 million shares in the float that were released, and CBOE Global Markets, I believe, yesterday started listing options. I haven't taken a look at that, but so you do have some options to trade for Lyft here. But obviously a pretty exciting IPO, viewed as a disruptive tech name here. It's the first out in the ride-hailing category. Uber, of course, will be out in a couple of weeks. I'm not sure the exact date on that.
I think it's going to be at least a few weeks.
Quick second here. So anyway, ride-hailing service, of course. It's one of the bigger. It's going to be one of the bigger tech IPOs for this year. It's had the same buzz that we saw around Facebook, Twitter, and Alibaba. So definitely pretty exciting name here. And what we're getting a better idea is of some of the fundamentals that are behind the business here. I think. Hold on one quick second. All right, Scott, can you hear me now?
I can hear you. Can you hear me?
I can hear you. Okay, great.
Great. I'm not sure what the issue was, but okay.
Yeah, no, for some reason, all my volumes were muted, so.
Okay. All right, cool.
So apologies for that, but yeah, was there something you were looking to add, Scott? I had missed anything.
No, just the Lyft IPO. You said that if I was long it, then yeah, I am still long. I think a few of us on this site are actually long it. You know, a couple people have gone after it after the recent IPO drop.
Long it too, right?
Yeah. For me, I wanted to wait for that support, obvious support, to kind of show up on the screen there, and for me it was $69 earlier in the week, and capitalized on about 3.4 point gain here, with price getting back to Monday's high. I'm not sure what to make of the Citron report that came out today. You know, the stock got a pop off of that, but then it just hesitated, so I was tempted to just throw out maybe a covered call on the trade. Sell some of the April 80s or April 85s on the remaining balance that I have, just to see how it plays out. But overall, I think it's okay above 69 for now.
Honestly, at this point, I would. It's hard to take Citron too seriously at this point, because it seems like he's just trying to manipulate short term, you know, like put on a position and put these things out and try and make a quick buck. But I basically said I wouldn't short it, which obviously...
Yeah, it wasn't a short call, right? I thought that the crux of... I didn't read the report, but I thought the crux of the report was everyone's going to try to short it because they're not making money and not respecting the disruptive properties that are involved here. So I didn't take it as a negative.
Right, yeah, he's saying, like, I wouldn't short it. I mean, you know, he was stating a lot of the obvious cases. You know, one thing that is interesting is I was just looking at this Market Watch story that was saying that, talking about how much short interest is in it already. Obviously...
And there's only 30.8 million shares, which is a pretty small float for something this size, right?
Yeah, definitely. Now, you know, eventually the supply is going to increase, which could be a headwind down the road. But for now, the float is very small, and obviously a lot of people who got an allocation flipped it a week ago, last Friday, and then it seems like shorts just kind of piled in. This S3 is a firm that's like really out on top of the short selling data. This Market Watch story says that more than 38% of the 32.5 million share float was short.
Wow.
That's what they said on Wednesday, so that was 2 days ago. So yeah, I mean, there's clearly some extremely bearish sentiment kind of took hold right out of the gate, which, you know, sets up you know, as a positive contrarian indicator. But obviously I didn't I displayed a lack of patience and had pretty poor entry. But Scott had a great entry this week in it.
Yeah, well, because I'm treating it more as a trading vehicle. I think there's a lot of volatility and hype around it, so I think it's just a really nice short-term trading. I think we're going to get a lot of good trades out of the name over coming weeks. So from an investment standpoint, I don't have any sort of a long time of horizon picture.
Sure, sure. I mean, this is right up your alley. A lot of volatility, a lot of liquidity in this thing.
Yep.
And for me, it comes down to, obviously I like it longer term, and it comes down to a question about valuation. So it's about 7 times sales right now, and as we've talked about in the past, there's a lot of software stocks with, yes, a lot better margins, a more clear path to profitability a few years down the road as they scale, trading at 10, 15, even 20 times sales. You look at somebody like Spotify, who also doesn't really have a clear path to profitability, but their margins are even worse than Lyft, and I think that trades at about 5 times sales, if I'm not mistaken, right now. So, my perspective on it is a long-term disruption of this massive transportation market. So, I mean, kind of like what Citron mentioned. I mean, you could make the case for pretty much every single software IPO when they come out. They're almost always losing money. That, how could you put this kind of valuation on a company that's losing money? But that's very, I'm trying to think of a better word than short-sighted, because I'm not trying to imply the short bearish bias. But, it's you're missing the big picture if you're just saying, oh, they lost $1 billion. Obviously there's risk to the story, but if they can continue growing at a very healthy rate, they can be a very serious disruptor in a $1 trillion plus transportation market. And
as long as the revenue stream, I think, is outrunning the losses here. I mean, you got revenue growth last year of plus 104%. When you compare that to the cost of revenue increasing 89%, at least they are growing that top line quicker. I mean, they were up 50% on their active riders from 12.6 million to 18.6 million in FY18. Their revenue per rider, too, increased from $27.34 to $36.04 in FY18. So they're definitely hitting on that top line, and I think their market share is up to 39% at the end of FY18 from 22% at the end of FY16. So definitely a lot to like on that growth platform.
Definitely. I mean, all the metrics are very impressive, other than profitability and margins and stuff, which will eventually be the most important thing. For now, they're just trying to grow as fast as they can. Uber is probably going to be coming out. They haven't disclosed their S1 yet, so it's going to be at least a few more weeks, probably another month or two. As soon as they do disclose their financials in an S1, then sort of starts the clock. So they was it a week or two ago, they acquired the Middle Eastern player, like the leader in the Middle East in ride sharing. So maybe that probably is kind of delaying it to a degree, because now they kind of have to incorporate all that stuff. I forget what the name of it, Kareem, I think it was called. So yeah, I mean, that's clearly the much larger, more dominant global player, and then they have Uber Eats as well, and they're more focused on autonomous driving, where Lyft is kind of just more the pure play domestic player in the space.
Now Uber is set to IPO next month then, Craig, right?
Yeah, it's kind of just a guessing game right now. So when they do finally disclose their S1, their initial prospectus, then from there it'll probably be about, I don't know, a month or so, 3, 4, 5, 6 weeks from there. They'll do the roadshow and all that. So until that happens, it's still kind of up in the air, but it is expected soon. But I would think that Kareem acquisition may have delayed it just a bit. So, but yeah, I mean, it's going to be coming in the within a month or two, and so there's hopes that they're going to get like a $120 billion valuation, and
they also have their a lot more revenue stream too, right? They've got their food delivery service and a couple other things for Uber, right?
Exactly. I just had a link here somewhere. So I think they did about 11 billion in revenue last year in 2018, which obviously is
10 times that of Lyft.
Yeah, yeah. So I mean, and once it starts trading, then obviously you'll be able to play a more relative. It'll have more of a direct comp because really right now there's nothing out there that really compares to Lyft. So that'll definitely add some more kind of clarity and add some relative valuation. So it'll make things easier. But yeah, as soon as that S1 comes out, it'll be interesting to compare Lyft to Uber for sure.
Yeah, there'll be a lot of people combing through those numbers, I'm sure. Right. Okay, taking a look at some of the other IPOs that we saw this week. We had Trading Web, TW, out. They had a pretty nice opening day of trading here. That stock, 40 million shares, it priced at $27, which was above the expected 24 to 26 range. Then it opened for trading at 34.26. It was able to march higher, but we are seeing it slow down a little bit here at the moment. Now, this is a trading platform. Just taking a look at the breakdown of their financials and where they were growing, and it really looks like their biggest volume in terms of trading there. Their closest competitors would be CME and ICE, would be in the interest rate area, where they had growth of about 40% year over year and 355 million in volume on a daily basis in the interest rate area. Credit market's a little smaller, but a nice growth at plus 67%. Equities were going 63%, so some really big growth numbers from this TW here. The one thing I was also seeing of interest was Blackstone acquired a 55% piece of Refinitiv, which was formerly the financial and risk business of Thomson Reuters, for $17 billion. TradeWeb Markets is currently 54% owned by Refinitiv, with the rest held by several banks. Following this IPO, Refinitiv will continue to own about 70% of the controlling stake in TW. But I would note that of all the 36.25 million shares that were sold in the IPO by TW, and the were sold by TW, I should say, and the company's planning on using these estimated proceeds of $854 million to purchase the outstanding LLC interest from certain bank stockholders in its name. But pretty strong opening here. Were either of you guys interested in this name, or is the space a little too dry for you?
Yeah, I haven't really looked at this one, to be honest. I don't really have much of an opinion on it.
Yeah, I mean, Gav, outside of yesterday and reading the summaries on our site and what it's about, it is a little intriguing. I think it's a good story, good space, so I'll be watching it. But again, as always with these IPOs, I need to see some price discovery first. I don't like to just dive right in. I need to see some support, resistance levels, and then take it from there.
All right.
Yeah, so Scott, so if it kind of just trades laterally here for a few more days, and then you see it start to move, closer to 36, 37, starts to break out, then maybe you'd be interested in jumping in.
Yeah, totally. That's exactly what I'm looking for. So, and that's with most IPOs.
Now Lyft got involved pretty early in, Scott. I mean, that's not usual for you, right?
It's not, but it's a hot IPO, and there was a lot of hype around it. Like we stated, there's good volatility, there's good liquidity. I saw a couple other guys try going after it on the long side. So for me, once that support was established around $69, then I just knew I had that backstop against me. So got long some on the confirmation that I was going higher, but my stop below 69, and it paid off a little bit. So same scenario here. I like the TW story. I think it's pretty interesting, but again, I'd rather wait for some daily ranges to develop and then take it from there.
It does seem like Wall Street is sort of interested in it. Obviously they are kind of like an institutional trading company, so I'm sure there's a lot of people on Wall Street that are familiar with them. Yeah, I don't really have much of an opinion on it. If we can come back to Lyft for a second,
Sure.
somebody wrote in saying the only way to make money for Lyft is to raise, or I'm sorry, don't they lose more money the more sales they generate? Every ride is a loss. The co-founders last week, I have seen a couple of leading to this really bearish sentiment. Some ideas that just seem wrong to me. Now, both the co-founders were on CNBC last week, and it's not true that they lose money on every ride. If that were the case, then yeah, I mean, there's no.
It's not like HMNY, right, Craig? Where they're losing money
exactly.
every time somebody went.
Exactly. They're not just burning. They're not burning cash. But it sort of like it comes down to the market, right? So in a market like Chicago, I would imagine they are at least break even, if not very profitable. I mean, the Chicago market is sort of mature. Again, there's some smaller upstarts like trying to go at it, but it's basically a duopoly between Uber and Lyft. And I know a lot of lazy people who just always use one of the two. If they're going a mile or a few miles, and if you're going halfway across town or a few miles, it's 10, 15, 20 bucks. Lyft takes 10 or 20%. The executives said that that there are positive unit economics. So yes, if they're still kind of in the process of expanding across the country. So if they're expanding into Tulsa and the surrounding areas, and less dense markets, then yeah, I mean it's gonna cost money to expand, and they might not be profitable for a while. Obviously, these are not, like, the rural markets aren't going to be as lucrative, but in big markets like a Chicago, New York, I would think that they are doing pretty well. The other thing that people have been saying is that there's like no barriers to entry, and that just seems like it doesn't ring true to me either, because yes, people could enter it. Like, Tesla is talking about how when their autonomous driving, if it actually becomes a thing, then people will be able to just loan their cars out without having to do anything, and like their car could become a revenue stream. So if you're talking about autonomous driving, that will create new entrants into the market. But sorry, I lost my train of thought there. This is a market where the scale really matters. So you can't just, you need to have enough drivers and users so that, if I want to ride, I can get it in a few minutes. And Uber and Lyft are really the only ones that are scaled like that. So it takes a ton of money to actually scale to the point where you're relevant. So to say that there's low barriers to entry, at least right now, couldn't be farther from the truth, because it's going to take hundreds of millions of dollars to scale up to the point where you have enough drivers to make it a service that is competitive to Uber and Lyft. Does that make sense?
Yeah, it makes sense to me, and just from perspective too of brand name as well, because I mean, I got my parents, they're older, they're going down to South Carolina, and they're planning on using Uber or Lyft for the first time since they got there. They really don't know what they're doing on that, but they do know that that college girl just got killed by that one Lyft driver. So, I mean, I think people are definitely still a little wary of just jumping into cars without some sort of reputation behind them, and I think Lyft and Uber have that at the moment. So I would say that's an additional barrier of entry there too.
Yeah, definitely. I mean, yeah, there's whole new opportunities with seniors and stuff. But another good example is some people I know that are in sales, where renting a car is almost a thing of the past, unless if you're traveling to a city for a short period of time.
And we've seen that in the Hertz results, and Avis as well too, of course.
Yeah, definitely. I mean, they're sort of in secular decline, and I have a friend who, either uses Uber or Lyft regularly when he's traveling, and his, you don't care if the company's paying for it. So, I mean, he racked up like $1,500 in a month in just Uber and Lyft. And I don't know, it's just a growing market. So I had assumed 3.7 billion this year in revenue, and the consensus right now is at 3.4 billion.
Which is because it was what was it, 1.04 billion in 2018 then?
It was like 2.17, I want to say. So yeah, they did 216.
216, okay.
Right now the consensus is 58% growth this year to 3.4 billion. I had been assuming closer to 70%. So right now the consensus is 58%. And obviously that's going to be important.
What does that bring the price to sales if we're trading at these current levels then?
It's about 7 times.
Okay.
7 times sales. So yeah, it comes down to the valuation. If you're somebody like me who's thinking about like long-term fundamental value. And yeah, this is the first of its kind in the public markets. So they were talking about 120 billion for Uber, and which would be about 10 times sales. So if Uber is better received and does well, then all of a sudden Lyft does look cheap. But of course, we'll see what happens with Uber. But yeah, it's going to be at least a month, I think, or so. So
okay. All right. Next up, we're going to take a look at Smartsheet. SMAR is the ticker symbol here. Real quick, consumer credit looks like that's increasing to 15.2 billion, a little light of the 18 billion that was expected from there. So not anything overly concerning there, but a small negative for retail going into the close of Friday trade here. But next up, I want to take a look at, Scott, this is one that has been around for a little bit of a while. I was talking with Dennis about this name, and that would be Smartsheet, ticker symbol SMAR. Basically, it's an IPO that came out back on April 27th, so just about a year old here. Again, that ticker is SMAR, and at the time they had 11.53 million shares. The price that opened for trading at $15 back on April 27th was expected, or I'm sorry, priced at $15, was expected to price between $10 to $12, and then it opened up at $18.40. Analysts were out about a month later on May 22nd with a slew of initiations in the buy at the buy levels. So basically what SMAR does is they develop workflow management software, similar to what we've seen from Team, ticker symbol TEAM. Basically how Dennis was describing it to me was Excel on steroids is a good way to think about it if you're trying to wrap your hands around. But some of the numbers that he was giving me were pretty impressive. You could see this stock had that big spike to $49 back on March 20th in reaction to its earnings. And since then, it's pulled back about 12 points to this 37 level, coming in a key support. But just breaking down some of the numbers here, it had double-digit revenue growth at 58% in Q4, which certainly stands out because a lot of that was coming from winning larger contracts, which is always the holy grail for these software companies. It helps drive that dollar-based retention rate. Specifically in Q4, its annual contract value increased 50% to $2,454 per customer, with a lot of that being ramped up at customers above 50,000, where that grew by 135% year over year to 44 total customers. And this helped push that dollar-based retention rate to 134%. For those trying to figure out what dollar-based retention rate is, Craig, feel free to add anything to this. I mean, it's more or less same-store sales for software companies, where you can really get a feel of customers buying additional products from that company because they're happy with how the software is performing. So
that's a good way of putting it. It's kind of like a same-store sales, but like anything in excess of 100% is like the same customers buying more. So yeah, a lot of these really strong software companies are reporting the net dollar retention rate like above 110, above 120, and some of them, like this one was what, 134?
134, which was the highest that I saw. I definitely saw a bunch of that 125 area. So valuations obviously pulled back in. Craig, I know you had this listed on your cloud valuation, which I believe you posted an update to yesterday, correct?
Yeah, this one is right up near the top. Looks like it's about 15-ish times this year's sales. So that puts it at
15.8 enterprise value to revs.
It's like, top 10, it's like 6th, 7th, 8th most expensive. So yeah, it's kind of comparable, I think, to the Atlassian, which is Team, T-E-A-M. And so, and we have...
trades at about 19.8 times.
Yeah, that
value to revs.
That one's like top 2 or 3 most expensive behind the Zscaler ZS and MongoDB. So the interesting thing about Team and Smartsheet is that Slack is going to come out. They're supposed to do a direct listing this summer. I think the last report I saw was either June or July.
Yeah, I saw that they're going to do on the ICE exchange, right? Is that what I thought I saw a couple of?
Well, so they're going to do a direct listing like Spotify did. So it's not going to be the traditional IPO route. They're just going to kind of list it, and so I guess they don't really need to raise any money. So I think that means they're not going to be actually selling any stock, and that just goes to show how robust the private market financing is. Somebody like Slack, they don't have to go public. They can raise money in a private market, but I don't know I don't know if it was similar to, I think it was either Spotify or Facebook, or there was somebody else where they basically had to come public because they had so many shareholders that there were some rules about when your number of investors gets to a certain point, you like have to list. But this is going to be another like really big high profile one, and I would assume it's going to be trading, definitely in the double digit sales, maybe even close to like the 20 times like some of these other ones. Looking up where their last capital raise was last August at $7 billion. Yeah, I mean this is going to be a big one, and it's going to allow us to kind of compare Team to Slack and maybe even Smartsheet. It's basically collaboration tools for companies, this is going to be like another really high-profile one that Wall Street will be very much focused on, kind of like how they were on Lyft last week.
All right, no, that's a nice one to keep an eye out on. Craig and Scott, though, do you have any opinions on this SMAR? Scott, it's coming back in a little bit. I know it's not your ideal IPO technical setup, but obviously it's got an established chart at this point.
Yeah, for sure. I mean, and it does actually fit into that whole theory of when an IPO comes out, let it trade for a little while, and if you go back in the charts over a year ago, you could see it came out, made its debut underneath 20, went sideways for like a week or two, and then started busting out over 20, pulled back, held it, and then just took off to the races a month later. And then over the course of the last couple of years, it's been basically in a 10-point range between 20 and 30, 35, I guess it is. But it held above that IPO initial range at the $20 mark, which is so critical for so many IPOs as time goes by. That's like their key inflection point or line in the sand to whether they could have potential to continue to go higher or not. And yeah, the stock has just been super hot for the start of this year, Q1. I think it obviously got a little bit far ahead of itself. It was trading at 22 in January, and it went up about 100%, all the way as high as 49, like you said. So I like the name. I think I haven't really been following it, but now that you guys put it on my radar, the first level here at the 50-day moving average is interesting, and if it cannot hold in there, I'd be looking more at prior resistance, new support in that low $30, about $30 to $33 would be, I think, an ideal point to look at this one again.
Craig, you got a top 3 in the cloud space that you like, just purely from fundamental business standpoint stuff, not necessarily looking at valuations, but and if I'm putting it on the spot, we could always circle back around.
No, it's okay. Well, I mean, obviously, you know, I'm a little biased with TTD. I love that one.
If I made as much money as you did on it, I'd love it too.
Yeah, you know, I should probably. I might be taking some more, just trimming a little bit more profit here on it at some point because, you know, I don't know. I'm not going to pretend to know how this cycle is playing out. Like I said, there's so many strong tech IPOs in the queue that I don't think, you know, we were overbought and we are kind of overdue for a pullback. But yeah, we'll see what happens. So I mean, I would have to put TTD in there. I don't know enough about like Elastic, ESTC, and Zscaler, you know, because of my because of the valuations, because I've looked at all the valuations, then I just basically have to assume that all the ones with the highest price to sales ratios are the best, you know, because that's basically what the market is saying. You know what I mean? You know, Mongo and ESTC are really strong, but again, the ones, something like Mongo that's run so far. I mean, I wouldn't recommend buying it at 150, but yeah, I mean, they're all very, very promising. When Slack's going to be in that same category. I still do like PS, but yeah, I don't know.
Okay, all right, no, that's fair. All right, well, I think that's going to do it for our IPO segment. Now, we'd be really happy, like I said, we're putting together a number of different segments that we're planning on cycling through over the course of the weeks. They're going to be more afternoon pieces, but if there's anything different you'd like to see about this IPO segment or whatever, feel free to write in and provide any suggestions. Obviously, we want to have it as the best tool for really helping point out and trading some of these IPOs and using it as a nice way of generating some revenue for our people out there.
Yeah, so if I could just add another a couple things. So yeah, sure. PagerDuty is one that's supposed to come out next week. The symbol is going to be PD, PagerDuty, and this is another one that's going to seemingly kind of be potentially at the top of, you know, that list that I post. It seems like it's going to be another double-digit sales multiple company. It's a small software company. I don't have a great feel for it yet, but they're growing 50% year over year. It's going to have a tiny float. So it's just going to be another one of these high-flying software stocks to put on the radar starting next week.
Are pagers back? I'm in.
Yeah, I mean, it's. I don't think it has any relation to the one from back in the 90s, but yeah, it's going to be another, you know, very richly valued momentum stock. And the other thing I wanted to add is that I have to give Scott BLUEX a ton of credit because we've talked about his IPO approach in the past, and it is very effective. So, you know, I come in with a fundamental bias, and, you know, as I displayed last week, I don't always have patience or the most discipline with it. But, you know, when Scott is good at monitoring these, and most of these IPOs, you know, there's some pretty much all of them. If you're patient enough and wait for that first break, you can catch big moves. So you know, Scott does have a lot of success with these recent IPOs. You know, so it's definitely worth monitoring when he kind of jumps on board. I mean, I've had a lot of big winners that I've held on to, but, you know, it is sort of a mixed track record where obviously Scott's a lot better with the timing of it.
Yeah, I mean, it's not rocket science, but I appreciate the kind words. I mean, it's really just identifying support and resistance, and I pay attention to what you guys write on the site about them, and your whether you guys like them or not, and then I just keep them on my radar. I mean, I don't trade every single IPO that's out there, but every now and then when I just glance through the site, I get a glimpse of something that looks interesting, and then I hear you guys maybe mention it, and then it just basically comes on my radar, and I just look for that perfect, well, not perfect, but I look for that low risk, high reward entry point to capture something to the upside. So
are you scanning a lot of these charts like almost every day, or once you see a range carved out, then you'll set an alert, or?
It's a combination of everything. So lately, I mean, the IPO market the last few weeks seems like it was pretty dead. There was nothing. It's got to interest me too. I mean, I'm not just going to go out there like this RUHN came out this week. I have no idea what that is. I don't understand the business model. I don't care if they were making $1 billion a year, but I just didn't hear anybody talking about it or anything else. So for something like that, I don't even bother tracking. But Guardian Health was one that came out last year, GH. I think I traded that a few times. I made a little money on that. I missed the big breakout in February and March, but that was a killer. But TME was Tencent Music. I did trade that at least 3 times, I think, this year so far. Made some nice money on that one based upon just setting up over the IPO range, etc. And that just makes sense to me. They're like basically the iTunes of China. So again, I have it's about the story, and then I just, like I said, I glance at the site, I look at the reviews and the quick synopsis. Sometimes you get a rating from it from Dennis, and then yeah, and that's pretty much it. So it's not every single one out there. Obviously, that's just too many for me to follow. But so far right now, I'm really just kind of looking at Lyft. I'm still watching Levi Strauss just because I'm familiar with the genes and the business. So, and then this TW just seems more intriguing to me as one of the ones that IPO'd this week. So, keeping TW on my radar.
Yeah, well, if I could add a couple more things. So, in general, I would say that most of these Chinese, unless it is a really interesting story, a lot of these Chinese ones like this RUHN, yeah, you're probably better off staying away
the garbage.
From a lot of them.
Oh,
yeah, exactly.
Yeah, you could tell somebody what a KOL is.
Yeah, so
if you don't understand the business model, stay away from it.
Exactly. So yeah, key opinion leader. At least I know what that is in like biotech, but so I haven't looked at this one at all. But yeah, just the way how it's traded in the first, I just really don't have much of an interest now. Now something like Tencent Music, which is like basically the Spotify of China, and it's a large company. It's not a little piece of junk. So that one, and like I sort of like a Huya, which is like a streaming leader and all that. Yeah, there's obviously exceptions, but I have personally found to be best off kind of avoiding a lot of these Chinese ones. But you mentioned GH, and that's another one that actually should be on that list that I put out of those software stocks. It's almost comparable to like a Tilray. That was kind of off my radar, and when it started collapsing, it had that huge breakout a month or so ago on earnings, and I looked at it about a week or so ago, and I didn't really know anything about it, but it's essentially healthcare technology type play, which has massive potential. We all know that healthcare cost is like one of the biggest drags on this economy, and so if there are some really innovative companies that are changing the game in terms of improving healthcare costs and stuff, like that's a really attractive story. And again, I don't know much about GH, but when I pulled it up a week or so ago and looked at it, I was hoping for a reasonable valuation, a 5 times sales or something that I could get interested in. But
chance, right?
It's trading at 42 times sales, so it's more expensive than all these other ones we've been talking about. It's twice as expensive as Mongo, MDB, ZS, Team, Okta, ESTC. I mean, this thing is valued like a Tilray. So when it comes into valuation, it's just a very difficult game to kind of gauge, because it doesn't matter until it does, and if you just completely ignore valuation, obviously if you're looking at the fundamentals, you can get killed. But that's another really interesting one.
So you basically just identified this as a trading vehicle for me. So
yeah.
I'm not a long-term investment, but it's going to be one based upon the 4-point ATR that it has, and trades about 500,000 to 1 million shares each day. Yeah, and you're telling me that it's overvalued, but the technicals are still there, the momentum's still there on a daily basis. So it's just a trading vehicle.
Sure, yeah,
To an
yeah.
investment. So,
and again, I don't know enough about it, but yeah, like the fundamental bias would be, oh, it's super attractive, but again, that's why it's got this insane valuation. So yeah, it should be a good trading vehicle.
Cool. All right, Gav, is that it?
Yeah, I think that's it then. Anything else to add?
No, it's Friday.
All right. All right, good stuff, guys. And like I said, feel free to write in and let us know what worked in this segment, what didn't, and we'll continue to tweak it and try to get the most value out of each piece.
All right.
All right, thanks a lot, guys. Talk to you guys later.
Cool.
Have a good one.